Okay, guys, hi. Today, I will start with chapter 1, Managerial Accounting and Cost Concepts. Mainly, we do have a difference between the financial accounting and managerial accounting. Financial accounting is concerned with reporting financial information to external parties, such as stakeholders, creditors, and regulators. If you remember from principles of accounting, we do have something called financial statements. These statements are mainly used by the external users, not the internal users. We assume that the management prepares these financial statements to or to help the outsiders to have their decisions or to make their decisions. The managerial accounting, which is our topic, is concerned with providing information to managers within the organization so that they can formulate plans, controls, operations, and make decisions. So mainly we are providing our information for internal users for their decisions, and it is not important to be reported for the outsiders. This is for the difference between the financial accounting and managerial accounting. We do have something called cost classification. First, before we go for the classifications of the cost, what are the purposes for the cost classification? We say that we need the classification to assign the costs to the cost objects. And I will comment about the word object. Object means the thing that you are allocate the cost to that thing. So if we think about a product, if we're producing a table, then what are the costs allocated to that table? In this case, the table will be an object. If we are serving customers as a service company, then the object in this case will be a customer. For the lawyer, let's say, we do have a customer and cases. If we think about a lawyer, then the case in this case will be the object. So the object is the thing that you are allocating the cost to. Example, the products, the case, the customer, the place, sometimes the lecture. If we think about the university, and we need to calculate the cost per lecture or the cost of a lecture, then the object in this case will be a lecture. Accounting for costs in manufacturing companies, we do need our information in managerial accounting and cost accounting, and these are a family. We need this information for mainly to be used in manufacturing companies. As you remember in principles, we do have three kinds of companies. First one is called merchandising companies, those who are buying and selling without any modification, without any manufacturing processes. The second type is the manufacturing companies, the companies who starting with the raw materials and make a process or a manufacturing process to convert it to finished goods. And the third type is the service company, servicing companies. So we need our information here mainly for the manufacturing companies. Number three, preparing the financial statements. We do have some items in financial statements depending on our information. So they need our information in order to get the amounts to be reported to the financial statements. Mainly, as an example, if you remember the inventory, they need some information from managerial and cost accounting to put the amount for the inventory in the financial statement. And number four, predicting the cost behavior in response to the changes in activity. We do have something called cost behavior, and we'll discuss the concept of behavior. We can say that some costs are variable in total, some costs are fixed in total, and some are mixed, which combine the fixed and the variable parts. And finally, we need the classification for making decisions. So our decisions are depending on these costs will be direct or indirect, will be period or per product, will be manufacturing or non-manufacturing. So our decisions are affected by the classification of these costs. So objective number one, we'll talk about understanding the cost classification used for assigning costs to the cost objects, direct costs and indirect costs. This slide is a summary. This slide can be a summary for the classifications, and this will be discussed through the chapter. So for the purpose of the cost classification, we need to say that cost is direct or indirect. And we'll discuss every or each classification in a minute. If we say that we need the costs in manufacturing companies, then the classification will be manufacturing or non-manufacturing. If we need our cost classification to prepare our financial statements, then we say that we need to classify these costs to be product cost or period cost. If we need for the cost behavior or predict the cost behavior, we say this cost is variable, fixed, or mixed. Finally, if we need for making decisions, we do have something called differential costs, sunk costs, and opportunity cost. Let's discuss each classification of these costs. Assigning the cost to the cost objects. If we need to assign the cost to the cost object, then we say these costs are direct or indirect. If we say direct costs, those are the costs that can be easily and conveniently traced to a unit of product or other cost object. Example, direct materials and direct labor are considered direct costs. Let's have an example. If we think about producing a table, suppose that we are in a manufacturing company and we are producing tables, then the wood will be a direct material for the product or for the object, which is the table. The labor, which is the employee directly producing that table, is called a direct labor. Why we call it direct? Because it is easily traced to the one product, which is a table. Then if we say we need 1 meter of wood for one table, this is easy to say that we need that much of wood for one table. So it is a direct material. Similar for the direct labor. But if we say for manufacturing a table, we need some glue, okay? Glue. The glue cannot be easily traced to the table. And the question again, what is exactly the amount of glue to be put in a table? It is not easily to measure that amount. So we call it indirect costs. Indirect costs, which is the costs that cannot be easily and conveniently traced to a unit of product or other cost object. Example, the manufacturing overhead includes the indirect materials like the glue, includes the indirect labor. If I consider myself as an employee directly producing a table, then what about my supervisor? The wages or salaries for the supervisor, in this case, it is an indirect labor. Why again? Because it is not easily to measure what is the time consumed by the supervisor to the one table, which is our product. It is easy again to say that the employee who are producing the table directly, this is called direct labor, because I know that I will spend 1 hour for one table, let's say. But for the supervisor, what is exactly the time spent for that specific table. It is not easy to measure that. And in this case, we called it indirect labor. Another example for the indirect costs also, if we have some maintenance for the machine in producing these tables, again, the question, what is exactly the percentage of depreciation related to a specific table? It is also difficult to be tracked. What is exactly the maintenance, if we have a maintenance for a machine, depreciation for that machine. Another example, electricity, which is utilities, electricity for that specific table. Again, my question is it easily traced to that specific table or not? In this case, we called it in manufacturing overhead or indirect costs. Indirect costs incurred to support a number of cost objects, more than one table. These costs cannot be traced to any individual cost object, and this is an important topic in cost accounting and managerial accounting. So we do have for the costs or assigning the cost objects, we do have direct cost or indirect cost. Learning objective number 2. If we talk about manufacturing and non-manufacturing costs, identify and give examples for each of 3 basic manufacturing costs or cost categories. Again, if we say we need to produce a table, then what are the things that needed for a table to be a finished goods? We need direct materials, direct labor, and the manufacturing overhead. These 3 components to be related to something called manufacturing costs, which is, in a minute, we will call it a product cost. Direct materials are raw materials that become an integral part of the product and that can be conveniently, easily traced directly to that product. If we say the wood as a raw material, it will become an integral part of the table, which is our product. And it is easy to say that, well, we need 1 meter of wood for 1 table. That is the direct material. Another example, the radio installed in your car is a direct material for that car, and it will be also an integral part of that car. Direct labor are the costs, are those labor costs that can be easily traced to an individual unit of product. Again, we say that we need 1 hour from an employee to make a table. Then it is easy to be traced for 1 table. Then we call it a direct labor. Wages paid to automobile assembly workers or the car assembly workers is an example for direct labor also. The word manufacturing overhead. Manufacturing overhead includes all other manufacturing costs except direct materials and direct labor. These costs cannot be readily traced to finished products. Includes indirect materials that cannot be easily or conveniently traced to a specific unit of product. If you remember, we say the glue is an indirect for the table. Nails, maybe it will be an indirect materials for a table because it is not also conveniently or easily to be traced for 1 table. The indirect labor costs that cannot be easily traced to a specific unit of product. And also remember that the wages paid to a supervisor, the supervisor is an indirect labor for 1 table because it is not easily to be traced for 1 table. Manufacturing overhead also includes depreciation for the manufacturing equipment, utilities costs, property taxes, insurance premiums incurred to operate a manufacturing facility. And be careful that we are talking about the manufacturing facility here. So if you say insurance, but it is not related to the manufacturing facility, this will be a non-manufacturing cost. Okay, so if we say manufacturing, we refer to all costs related to the product, and it will be an integral part of the product. Only those indirect costs associated with operating the facility are included in the manufacturing overhead. Direct material and direct labor are called prime costs. The first two manufacturing costs are called prime costs, which means we don't have any product without the direct material and direct labor. The direct labor and the manufacturing overhead are called conversion costs. Conversion cost from the word convert, which means these costs convert the direct material into a finished goods. So we call that conversion costs. The other category for the manufacturing, for the manufacturing companies, if you remember the classification, we say for the purpose of accounting for cost in manufacturing companies, we have manufacturing costs and non-manufacturing costs. So what is the non-manufacturing cost means? It includes all other costs, but not manufacturing, which means all selling expenses and administrative expenses or costs. Selling means the costs necessary to secure the order and deliver the product, and selling expenses can be direct or indirect. But in all cases, it is non-manufacturing, which means it will not be an integral part of the product. If you remember the table, we include the direct material, direct labor, and the manufacturing overhead for the cost of the table. But the selling expenses, it is not an integral part of the table, then it will be a non-manufacturing. And also the administrative costs, which includes all executive, organizational, and clerical costs, which means it is related to the management. It is not related to the manufacturing process directly. So the administrative costs can be direct or indirect, but it will be non-manufacturing. It will not be an integral part of the product. Learning objective number 3. Understand the cost classification used to prepare financial statements. We will classify our costs as product costs or period costs. The word product includes all the costs that are involved in acquiring or making a product, which means, again, integral part of a product. Product costs attach to a unit of product as it is purchased or manufactured, and they stay attached to each unit of product as long as it remains in inventory awaiting for sale. So all the costs related to the product or related to the item that we are purchasing or manufacturing, it will be an integral part, then we call it product cost. And for our products, if we are selling our products, then it will be an inventory in our warehouse, which means it will be an asset awaiting for sale. For the manufacturing companies, product costs include 3 inventories, if you like. The first inventory, called raw materials, which includes all materials that go into a final product, which means these raw materials are used to produce our products, like the raw materials, like the wood to manufacture a table, then we do have a raw material not used yet in the production. We do have finished goods costs, which consists of completed units of product that have not been sold yet to customers. So we do have these tables ready for sale. It is completed. The production is completed, but awaiting for sale. In between, we do have the work in process or work in progress, and we call it semi-finished goods, which consists of units of product that are only partially complete and will require further work before they are ready for sale to customers. Then remember that we are selling only from the finished goods, and we are not selling from raw materials or work in process. Okay. But for the manufacturing companies, they have three kinds of warehouses. The first one includes raw materials not used yet. The second one is the work in process, which is semi-finished, and these two are not for sale. And the third one, which is called the finished goods inventory, and this is the only one for sale to customers. Now, the transfer of product costs, the sequence or the relationship between these three warehouses or accounts. When direct materials are used in production, their costs are transferred from raw materials to work in a process. They are not raw materials now because they started or they used in the production, so we convert it into the work in a process, not a raw material. The work in a process needs direct labor and manufacturing overhead costs to start the processing. So direct labor and manufacturing overhead costs are added to the work in a process to convert the direct materials into finished goods, which is called conversion costs. Once units of product are completed, their costs are transferred from work in process to finished goods. And when the manufacturer sells the finished goods to customers, these costs are transferred from finished goods to cost of goods sold. And then we will say that these costs are transferred to the income statement rather than the balance sheet or financial position. Look at here, cost classification for preparation of financial statements. And this is the important topic. When we say product costs, these include direct materials, direct labor, and manufacturing overhead. And it will be an inventory as an asset in the balance sheet or financial position. And when we sell these finished goods, it will be transferred into cost of goods sold, which is reported to the income statement rather than the balance sheet. But for the period costs, which include all selling costs and administrative costs, all of these period costs are reported to the income statement directly, and it will never be an integral part of the product. So we will consider it as an expense in the income statement. For a quick check, number one, which of the following costs would be considered as a period rather than a product cost in manufacturing company? We need the period, not the product. Number A, manufacturing equipment depreciation. From the word manufacturing, so the depreciation will be an integral part of the product, then this will be a product cost. Property taxes on corporate headquarters. The word headquarters leads us to be a period cost. Why? Because it is related to the administrative. So number B is a period cost. Number C, direct materials costs. The direct materials will be an integral part of a product, so this will never be a period. Number D, electrical costs to light the production facility. For the word production facility, we know that this electricity will be a manufacturing costs, and then it will be an integral part. So number D will be a product, not a period. Number E, sales commissions, which is apart from the sales or the selling expenses. And in this case, this will be selling or period costs. So number B and E will be a period cost rather than a product. Learning objective number 4, understand the cost classification used to predict cost behavior, variable costs, fixed costs, and mixed costs. Cost behavior refers to how a cost will react to changes in the level of activity. The level of activity, just for your information, what is the level of activity? Level of activity can be units produced, can be machine hours for the machine, can be kilometers for the car or automobile, can be number of students X, okay? So we do have to predict how the costs react with the changes in the level of activity or the number of units sold or the machine hours consumed or something like this. We do have 3 classifications for the cost behavior. The first one is called variable costs. The second one is called fixed costs. And the third one is called mixed cost, which includes both variable and fixed. Okay, variable costs, which is the cost that varies in total in direct proportion to changes in the level of activity. And we are talking about in total in this case, okay? So the shape for this cost will be a line starting from 0 and increasing in constant or a fixed proportion, which is the slope for the line. So the shape will be what's like this. This will be total variable cost, Remember that the x-axis referring to the level of activity, the y-axis referring to the costs all the time, okay? So the total variable cost starting from 0 and increasing in fixed proportion. But if we are talking about the variable cost per 1 unit, which is the other one. The x-axis is units or level of activities. The y-axis is always cost, and the variable cost per 1 unit is what? If we think about the table again, suppose that we need $5 for the wood if we produce the first table, okay? If we produce the second table, then how much do we need to pay for the wood? It will be $5 also. For the third table, we need $5. For the 10th table, we need $5, which means this line will be constant, referring to the $5, which is the cost of the direct material of a table. So the variable cost per 1 unit is constant. Again, the wood for 1 table is constant if we are talking about 1 table. But for the first line, for the first graph, if we produce more, then we need to pay more. If we produce one table, we are paying $5. If we produce two tables, we are paying $10 and so on. So the line will be increasing, okay? For the variable, for the before the fixed cost, an activity base, which is called the cost driver. If our example are talking about the tables, then we say the units produced causes the cost. The cost driver means a measure of what causes the incurrence of the variable cost. Think about the tables again. If we say we need to produce more tables, then we need to pay more cost. So what causes the cost? It was the number of tables. Then the units produced is the reason for the incurrence of the variable cost. And remember that the wood in this case is a variable cost. If we think about a machine hours, then if the machine works more, then the cost will be more. So what causes the costs? It was the machine hours. Okay, so this again, the machine hours will be the cost driver, which is the reason or the causes to the incurrence of the variable cost. If I'm talking about myself, then the cost driver will be the labor hours. The labor hours. Doing more labor hours means the cost will be more, okay? Then the cost driver in this case will be the labor hours. If I'm talking about our cars, then the more you drive your car, the more costs you pay. Then we're talking about miles or kilometers driven, and this will be the cause or the reason for the incurrence of the variable cost. This is called the cost driver. What about the fixed cost? Fixed cost. Fixed cost is a cost that remains constant in total, regardless of changes in the level of activity. If we think about what? Think about rent. We are paying rent regardless of how many tables we are producing, right? So the units of activity will be in the x-axis, level of activity, and the dollar sign or the cost will be for the y-axis. Remember that we need to pay rent for, let's say, $1,000, regardless of how many tables we are producing. So this will be a fixed cost. So the total fixed cost will be constant regardless of how many tables you are producing. But if we express on a per 1 unit basis, the average fixed cost per 1 unit varies inversely with changes in activity. Let's draw it. So if we produce, suppose that I'm talking about the same example, we are paying $1,000 as a rent, one example of fixed cost. Suppose that I'm producing only one table. So the one table will have the whole amount of 1,000 of that rent, in addition to the $5 of the variable cost of wood. But if we produce 2 tables, each table will have $500 from that rent. If we produce 1,000 tables, then each table will have $1 only from the fixed cost of the rent. Then the per one or per unit costs or fixed costs will be inversely related to the number of tables that you are producing. So if we produce one table, look, one table will refer to the 1,000, right? But if we produce 1,000 table, this will be $1, which means 1,000 divided by 1,000 tables, $1,000 divided by 1,000 tables. So this refers of fixed cost per one unit, fixed cost per one unit. And it is again inversely related to the changes of the level of activity. Okay. Types of the fixed costs can be committed or discretionary. The committed is a long term, cannot be significantly reduced in the short term, and discretionary may be altered in the short run by current managerial decisions. One cannot be reduced in a short run, and the other one can be reduced. The linearity assumption and the relevant range. A straight line closely approximates a curved linear variable cost line within a relevant range. Accountant's straight line approximation constant unit variable cost, which means, or the target for this slide, just to say that we do have a relevant range for a cost to be constant, and it can be more than the capacity or more than the relevant range. What else? The fixed costs and the relevant range of activity pertains to fixed costs as well as variable costs. For example, assume office space is available at a rental rate of 30,000 per year in increments of 1,000 square feet. Fixed cost would increase in a step fashion at a rate of 30,000 for each additional 1,000 square feet. What does that mean? Look at this example. We do have an office space and we are paying 30,000 per year for 1,000 square feet. We are paying $30,000 in the y-axis, the rent cost in thousands, $30,000, and the x-axis refers to the level of activity, which is square feet or rented area. So we are using our space or office 1,000 feet and we are paying $30,000. Now, if we need additional square feet, it cannot be gradually increased per square feet. So we need another space or another capacity, which means another 1,000, and the cost will go in a step fashion, not gradually, in a step fashion. So we are jumping from 30,000 to 60,000. Why? Because we are increasing our space or square feet from 1,000 to 2,000. So the relevant range of activity for a fixed cost is the range of activity over which the graph of the cost is flat. So we can use up to 2,000 square feet and we are paying $60,000. If we need more square feet, then we have to jump to the 90, which is the third level, or to have additional 1,000 square feet, and we are paying 90,000. This is called step fashion or step fixed or variable. It can be both. Comparison of cost classification for predicting cost behavior. In total, the variable costs increase and decrease in proportion to the changes in activity level. The example is wood for tables. If we produce more tables, then we are paying more wood as a total, in total, and it is called total variable cost. The per one unit, the variable cost per one remains constant. Remember that we need $5 for each table. The fixed cost, the total fixed cost is not affected by changes in activity level within a relevant range. Example, the rent, we are paying that rent regardless of how many tables we are producing. But the fixed cost per 1 unit decreases as the activity level rises and increases as the activity level falls. So when we produce more, the portion related to one table will be less. Which of the following costs would be variable with respect to the number of ice cream cones sold at Baskin and Robbins? Number A, the cost of lighting the store. We are doing the lighting regardless if we sell or not, so this will be fixed. Number B, the wages of the store manager. Definitely it is fixed because it is not depending on how many ice creams that you are selling. Number C, the cost of ice cream, definitely it is a variable because if we sell, then we are, we do have a cost for the ice cream. The cost of napkins for customers, and this is also a variable. If we sell, then we will pay the napkins cost. So number C and D will be variable rather than fixed. I'll stop here for the mixed cost. Thank you.